All right, we need to talk about how tricky it can be to trade trendline breaks because it seems simple in theory. Once the price crosses the trend line, then we should be able to take the trade, right? Well, we're going to quickly look at this day right here, a day that looked bullish on all accounts, day chart, hourly chart, all the way down to the 5-minute chart. Everything looked like it was going bullish. We're looking for a trend line break. And there's this particular trend line break on the 10,000 tick chart, which is like the 15-minute chart if you wanted to compare, where it goes down right here to the 20 EMA and then pops right back up. Pretty simple, right? Here's what it looks like on the trading time charts, the 1 minute or the 1,000 tick chart. And you can see all these different trend lines. We're going to go over these real quickly to show you how easy it is to get faked out and how to avoid that, because trend line break strategies can be very useful if you know how to tweak them and modify them to make them more effective. So let's look at that. All right, let's take a look at this again on the higher time chart, which is about the 15-minute or 10,000 tick. You can see that it looks pretty smooth. You only see this one kind of trend line coming down this way, and then it tries to pop up here, and then it uses that same first initial trend line as support. And then when it finally breaks that, it goes up. It looks in after sight, it looks like it's a beautiful setup. What could go wrong? Well, these pop-ups right here are very, very tricky. Now you see the second trend line right here actually did have a pop-up too. So in a very real-time sense, you have to understand in real time things are so much different. In real time, there would be another trend line coming to the top of that pivot because it made a new high there, and then you would be dealing with this pop out here. I didn't draw that on there, but we'll get to that in a minute. That's the 10,000. It looks simple, it looks clean, and when you get down lower, you can see what's actually taking place with all this, and it still looks pretty simple on the 5,000 tick chart. Now, if you're taking trades on higher time charts, I know people that trade the 4-hour time chart. You know, if you want to have a larger risk, you don't have to go down to the 1-minute or 5-minute time chart and use the strategy. You don't, but the drawdown and the risk is bigger on higher time charts. So if you don't want to risk more than $500 or $100, you got to go down to the smaller time charts and try to have a shorter or smaller stop loss. And so it does get trickier though. And so let's drop down to the 2,000 tick chart. So now you can see the 2,000 tick chart and start seeing that first trend line coming down where it popped up and faked. Then you see the second trend line come down where it popped up just a little bit and continued down. And then it starts to finally make a way across. And we're going to look at that. That's the 2,000. Here's the 1,000 tick chart. And look at all the different ways it popped up. These circles here are head fakes. If you're on the 1,000 tick or 1-minute chart, you're going to get a lot more head fakes. Right? And on the 250 tick chart, which I use on FOMC, Federal Reserve announcement days, there's a lot of head fakes on this thing. Okay, so now that we pointed out the complexity and the increasing amount of head fakes, the lower down the time charts you go, I just want to make a point that using all of them together is very essential. This is the key. Using multiple time charts and drawing multiple trend lines on higher time charts, getting a wider understanding and perception of the actual price action is the key. Let's take a look at that. Now I could go over brand new all of these trend lines one by one, and I'm going to try not to do that because it'll make the video really long. And but you can do this study yourself in real time when it's ticking. Have multiple time charts. Most of the time I use the 1,000, the 2,000, the 5,000, and the 10,000 tick. It's the charts are much cleaner and smoother looking, and it gives me the volume right on the chart because the ticks are how much volume is taking place. And anyway, use whatever you want, but use multiple time charts. And right here, you can see in the 1,000 tick chart, like I said, all the different head fakes that were coming in. Now, when I trade the trend line breaks, I usually use the 1,000 and the 2,000, and I want the trend lines on both of these charts to look good. In other words, if I see a breakout on the 1,000 or beginning to break out, and it looks like it's just trapped underneath a trend line on the 2,000, I won't take it. In other words, the 2,000 tick chart can keep me out of trouble a lot, right? So there's This trend line break right here that happened is the only one on the 2000 tick chart that threw me off. So in other words, all these trend line breaks right here did not look good on the 2000 tick chart. Only this one right here, I'll draw another circle around it. That one right there looked really, really good even on the 2000 tick chart. Let's take a look at that on the 2000 tick chart. Here it is right here. And you can see that it clearly broke this trend line and it was going up on both of these charts. Okay, so what I'm saying is there's no strategy that is 100% bulletproof, but a strategy can actually be increased or optimized to avoid a lot of losses and then be ready for the big moves when they happen. Of course, you don't know which trend line is going to break. It could have very easily took off from here, and a lot of times it does bounce off the 20 EMA or the 50 EMA. You have to understand that if it looks good and it fits the trend line break strategy, you've got to take the trade. Okay? So 70%, 65% of the time it wins, 35% you're going to be wrong. That's pretty good strategy. All right? So to minimize the amount of times we're wrong, we're going to use multiple time charts. Now, what did this look like on even the 5,000 tick chart? Well, on the 5,000 tick chart, it was pulling back to the 20 EMA, this very first trend line break. This green candle, this wick, was starting to turn green. Okay? It was above this trend line. It was starting to turn green and strong. Okay? So it looked good. It was poking through. It had a strong penetration on the 5,000. And this first trend line right here was being broken in a green candle on the 10,000. So I said, hey, let's try it. Let's give it a try. And that was wrong. However, that's okay. Because I avoided the first two, I took the second one, looked reasonable. And from that point, we draw another trend line. Wherever the tip or high point of the previous failure was, becomes the new tip pivot point for the next trend line. And as you can see, this next circle, it broke over the top of that newly drawn trend line into this area here, which created another trend line, but we're not to that point yet. This candle right here popped over the newly created trend line, right? But what did it look like over here on the 2000 tick chart? Here's the newly created trend line, and you can see that it barely pokes up under, and it's trapped under the, sometimes using the, the 20 EMA and the 50 EMA when it gets trapped underneath. That's why this trend line over here was the best break. Why? Because price started actually coming up over top of the moving averages. You don't have to wait for it to come over the top, because sometimes the best price is in the danger zone or in the caution zone. But, you got to work out your own strategy, your own mentality on how you're going to work this. But it didn't look good on the 2000 tick charts, what I'm trying to say. This trade did not look good on the 2000 tick chart. 5000 tick chart, once we draw that new trend line over, let's go ahead and do that. Put it right here on top of that pivot that just failed. Let's go ahead and do it right here. You could see that it actually didn't look too bad on, let's get this just right, it started to push up off, it bounced off of the 20 EMA, crossed over top of both those trend lines and it actually closed in a solid green candle. It closed above. So that's quite interesting, but it didn't look good on these other charts. It didn't have, after getting faked out once, you have to be cautious. And that's something I should add. When it's stretched, look at how high it's stretched out. Now, this is important, because if the price on the hour chart has stretched so far away from the 200 moving average, you might want a multiple leg pullback. 1, 2, 3, 4, 5, and then it rolls into a cup with handle. If it's really far away from the 200 EMA and it's already had a third leg up, okay, you can't expect any of you, and maybe you've already had a good trade on the way up. If you're at the top of a third or fourth leg up and you're trying to catch that first bounce and it fails, let it keep failing. That's with time and experience. You'll learn that. Time and experience. Depends on the overall look of the entire trend up. If this is just beginning, then yeah, I'll take that first one, second one. I'll keep trying. If it's on the fourth leg up or third leg up, and it's far away from the 200, then I know that it's probably going to pull back. I'll be looking for fair value gaps on the 15-minute chart, the hourly chart, Fibonacci pullbacks to 38.2, maybe 50% pullback. I'll be looking for a pullback. I'll be counting the waves down. See, here's a perfect example of the multiple legs up already and how far away it is from the 200 moving average. Perfect example. You could see the legs up 1, 2, 3, 4, and then it starts to go sideways. And these sideways, you can get some trend line breaks. Keep your risk managed very, very nicely, but you have to, when this is the 5,000 tick chart. So using the 5,000 tick chart to count the waves, we're still taking trades on the 1,000 tick chart, right? So you still want to be aware of how many legs up it is and how far away it is from the 200 EMA, right? That's an example of what I'm talking about. If it's this far stretched out and you're trying to catch a trend line break on the 1,000 tick chart and it fails the first time, then let it pull back. In fact, on the 1,000 tick chart, a lot of times it will look like it's bearish and going in the other direction, and it'll still have its composure on the higher time charts. In other words, the moving averages will still be trending the way they need. They haven't crossed over. This move down right here will look really bearish on the 1,000 tick chart, and that's when you know you're getting a really good opportunity and pullback. All right, those are great opportunities. You got to be careful when these moving averages eventually cross, though. But like they come close. When they come close, that's the best opportunity. They're coming close, but they're not crossing. That is really a good sign. Now, when they finally do cross, right here, you can get into trouble. This is added knowledge, added variables to help you understand. Okay, so how to avoid some of these fake outs? By using multiple time charts, by looking at how the break of the trend line looks on all time charts, right? Where's it at in relation to the moving averages? Where is it at in relation to the 200? How many legs up has it been? Only one or several already? Has it faked me out once already? Put it all together and you'll be able to create a discerning wisdom, literally, a perception, an intuition, a sixth sense, if you will. And that's what all the masters have created, a way of looking at the market, that they have a gut feeling because of their experience and time of practice. And something can look really, really, really good and fake you out. But with time and practice, and why did that fake me out? How many legs up was that? And did it look good on all the time charts? And then, okay, if it fakes me out, that's just part of the loss. I haven't lost in a while. That's just my loss. I got to take that loss on the chin. That's just the way it goes. Okay, so summarizing this video, multiple time charts, looking at the trend line break on all the time charts. Where's this opportunity at in light of the overall trend up? Are we early in the trend up, or is it late in the trend up? How many times has it created a trend line break already and was successful? If it's the third or fourth one, you have to be more cautious. Go lighter in your position size. How far away is it from the 200 moving average? When you get a trend line break that's close to the 200 moving average like these are much more reliable, much more reliable. Okay, so there's a bunch of things, a bunch of components, a bunch of ideas that piece it together with experience and time should help you get better and better at the moving average trend line break strategy. God bless you. Peace.